Hey everyone. Welcome to another episode of Investing Kev. In today's episode, I hope you're not hungry while you watch because we're going to take a look at Yum Brands, ticker YUM. We'll take a look at their company profile, their financials, their Q1 earnings report released today, their outlook, the risk factors, the price target, and I'll wrap it up with my final thoughts. We are in the final month of my strategies portfolio where I'm invested in 4 different common investing strategies. If you want to check in on how it's doing, the link to the spreadsheet will be in the description box below. For full disclosure, I do not own any shares of Yum Brands. As always, this is for entertainment purposes only. Always do your due diligence. If you like my content, please like this video, please subscribe, and let me know in the comments what you think. Alright everyone, let's get started and see if by the end of this video you have an appetite to buy the stock or if you've lost your appetite. Yum Brands is based in Louisville, Kentucky. It has over 53,000 restaurants in more than 155 countries and territories. It operates in the company's brands KFC, Taco Bell, and Pizza Hut, global leaders of the chicken, Mexican style, and pizza food categories. The company's family of brands also includes the Habit Burger Grill, a fast casual restaurant concept specializing in made-to-order char-grilled burgers, sandwiches, and more. In 2021, Yum Brands was named to the Dow Jones Sustainability Index North America, and it was also ranked on Newsweek's list of America's most responsible companies. Everyone knows about Colonel Sanders' world-famous Kentucky Fried Chicken. KFC's motto is finger licking good. Everyone knows to live Moss and eat at Taco Bell. Pizza Hut's name and recognition has been known for decades. No one out pizzas the Hut, and this is a Habit Burger Grill. I've actually never been here before. I don't know if there's any locations near where I live, but the photos of the burgers look really delicious. Looking at their financials, I want to take a look at their total revenues. In 2019, they had total revenues of $5.59 billion. In 2020, $5.65 billion. And in 2021, it was $6.58 billion. From 2020 to 2021, they saw an increase in revenues of 16%. Their costs and expenses went up every year, but their operating profits looked nice. Outside of 2020, when COVID impacted everything, their net income was over $1 billion in 2019 and 2021. From 2020 to 2021, they saw an increase of 74.2%. And if you're interested in dividends, their dividend in 2021 was $2 a share, which was a 6.4% increase from 2020. Looking at their balance sheets, what stands out the most is that their total liabilities are double than that of their total assets. Their total assets in 2021 were $5.9 billion US dollars. Their total liabilities in 2021 were $14.3 billion dollars. The reason why their debt is so high is because a few years ago, when interest rates were dirt cheap, a lot of companies did a lot of buybacks and borrowed debt to accelerate those buybacks. This is what Yum Brands did, and this was before the pandemic hit. This was from March 2020. Yum Brands suspends $2 billion buyback program, provides a royalty grace period for franchisees. Yum Brands has suspended its $2 billion share buyback program. It's also tapped into a $525 million revolving credit facility as the COVID-19 pandemic puts pressure on the restaurant business. I personally think share buybacks are fine, but when debt is used, I'm not a fan of that. In my opinion, quite often the share buybacks are said to reward the shareholders, which is true. But I personally think they're more to raise their earnings per share so the executive team can hit their bonuses. I want to take a look at their first quarter results that were released this morning. This is for the first quarter that ended on March 31st, 2022. Worldwide system sales excluding foreign currency translation grew 8% with 6% unit growth and 3% same-store sales growth. First quarter GAAP EPS was $1.36, which is an increase of 27% year over year. First quarter EPS excluding special items was $1.05, a decrease of 1% year over year. This is what David Gibbs, CEO, had to say. Our system sales grew 8% despite the difficult operating environment. This is a testament to the demand for our iconic brands and unmatched operating capabilities of our world-class franchise partners. We set a Q1 development record, opening nearly 1,000 gross units. Momentum in our digital sales continued in the first quarter as a result of both continued system sales growth and digital mix expansion, reaching a Q1 record of approximately $6 billion. Worldwide system sales grew 8%, with KFC at 9%, Taco Bell at 8%, and Pizza Hut at 3%. They added 997 gross units during the first quarter. This resulted in 628 net new units and 6% unit growth year over year. They have reported digital sales of approximately $6 billion. This is up 15% year over year with digital mix exceeding 40%. And they repurchased 3.4 million shares totaling approximately $407 million at an average price per share of $121. Looking at their KFC division, in the first quarter of 2021, they had 25,292 restaurants. In 2022, in the first quarter, they had 27,372 restaurants. This is an 8% increase year on year. And their system sales in the first quarter of 2021 were $7.2 billion. In 2022, the first quarter was at $7.7 billion. This is a 6% increase. The KFC division opened 587 gross new restaurants in 49 countries. Looking at Taco Bell, in the first quarter of 2021, they had 7,493 restaurants. In 2022, they were at 7,831 restaurants. Their system sales in 2021 first quarter were at $2.8 billion. In the first quarter of 2022, it was at $3.1 billion. This is an increase of 8%. Taco Bell's division opened 63 gross new restaurants in 13 countries. And looking at their Pizza Hut division, in 2021 first quarter, they had 17,710 restaurants. In the first quarter of 2022, they had 18,518 restaurants. Their system sales were at $3 billion in the first quarter of 2021, and in 2022 is at $3.1 billion. This is a 2% increase year over year. And their Pizza Hut division opened 334 gross new restaurants in 40 countries. And looking at their Habit Burger Grill division, the Habit Burger Grill division grew system sales 17% for the quarter. They also opened 13 gross new restaurants in the US and Cambodia. In the Habit Burger Grill division, same-store sales increased 3% for the quarter. Looking at their future, Yum Brands has really tapped into the digital side of things and it's paying off. I want to take a look at this article from Forbes that came out back in February. Yum Brands sets industry development record, doubles digit sales in 2 years. Digital helped drive those unit economics, with $22 billion in sales coming from digital channels even as dining rooms reopened. This marked a 25% increase over 2020 digital numbers and suggests a permanent shift in consumer behavior. Digital also contributed to strong same-store sales both domestically and internationally. KFC US experienced a 4% increase in US same-store sales and 12% on a 2-year basis. While the brand has benefited from group ordering occasions and its increasingly popular chicken sandwich, which now accounts for 9% of its sales mix, it is also experiencing a strong tailwind from its digital efforts, like the launch of a quick pickup order channel and its fledgling e-commerce platform. Meanwhile, Taco Bell, which experienced a same-store sales increase of 8% on the quarter, now generates about 20% of its sales through digital channels. These strong digital numbers come as a result of investments we've been making. Our strategy has been around digital because we knew it was the future of the industry. Whenever you nearly double your digital sales in 2 years, I think that is evidence those investments are paying off. And back in September 2021, Yum Brands completes acquisition of Dragontail Systems, an innovator in kitchen order management and delivery technology. Dragontail's platform is focused on optimizing and managing the entire food preparation process from order through delivery. Its connected, intelligent, end-to-end AI-based solution automates the kitchen flow combined with the process of dispatching drivers. It helps restaurants sequence and time each order while planning optimal delivery routes and combining delivery orders by location. The technology also offers consumer-facing capabilities that enable customers to track their order and route. In addition, it can operate with outside food delivery partners. A key growth driver for our business and our teams is the continued acceleration of our digital and technology strategy. This includes how we leverage our global scale with investments and technology initiatives that enhance the customer and employee experience, strengthen restaurant unit economics, and provide a competitive advantage for our franchisees. Delivery, which Yum Brands offers in over 39,000 restaurants, is a key part of the company's strategy. This is driven by a combination of expanded aggregator partnerships and continued investments in its own branded channels. Dragontail's kitchen order management and delivery technology is deployed across nearly 1,500 Pizza Hut restaurants in over 10 countries. Many Pizza Hut restaurants leveraging Dragontail's platform have already seen a positive impact on sales, order fulfillment, and customer satisfaction scores, including product freshness and delivery time. I want to take a look at the future of online ordering and food delivery. In fact, the growth rate of online food ordering and restaurant delivery has been over 20% over the last 5 years. Although the estimates differ across locations, online food delivery rates are expected to grow to more than $220 billion by 2025. This translates to about 40% of the total restaurant sales. In terms of percentage, about 42% of the overall food ordering market are now being placed online. Collectively, the annual growth rate of the food industry is about 3.7%, with the online ordering and food delivering growing at an annual rate of 15 to 20%. The realization of the changing customer preference has forced restaurants to respond and take the necessary actions to meet the changing demand. About 37% of restaurants in the world are more offering online ordering services, while 32% are now accepting mobile payments. Some of the notable online ordering trends include orders by tweets, smartwatches, television screens, virtual assistants, and cars. As more innovations are being introduced in the e-commerce industry, so are they integrated by food businesses in their platforms. Similar pace and innovations is also being experienced in the food delivery segment. Apart from the traditional approach of the delivery by a person, innovative delivery options like pizza drones, robots, and parachutes have secured their place in the segment. The last thing about their outlook is the brand name and recognition. KFC, Pizza Hut, and Taco Bell have been around my entire life, nearly 30 years. As much as it's a risk factor that there's so much competition, people really love these places. They're quick, they're affordable. Through the good times and bad times, people have to eat. There are people who swear by KFC, Taco Bell, and Pizza Hut. Food preferences will change over time. KFC and Pizza Hut have adapted with it by partnering with Beyond Meat. They've had Beyond Meat Pizza and Beyond Meat Chicken Nuggets. And when we take a look at Taco Bell, they continue to add new items to their menu. Yum's Taco Bell has never been shy about giving its customers what they want, and they want it all. We will continue to see if they can maintain their brand name and recognition in the years to come. Looking at the risk factors, I would definitely say competition is the biggest one. When I think of KFC, I think of chicken. I think of their competitors like Chick-fil-A and Popeyes. Do you remember back in 2019 the chicken sandwich wars? That was a crazy time. This is my personal experience, but every time I drive by a Chick-fil-A, there's always a minimum of 5 cars in the drive-thru. Popeyes is also busy whenever I drive by. Whenever I drive past KFC, I rarely ever see it busy. Let me know in the comments what your experience with KFC is. When I think of Taco Bell, there's multiple Chipotle locations nearby. There's quite a few local authentic Mexican restaurants nearby. Even with that, Taco Bell is pretty busy whenever I drive by. When I look at Pizza Hut, they've closed many stores in the past few years. Their main competitor is Domino's. Again, this is my personal experience, but people that I know will always choose Domino's over Pizza Hut. Last year, while the pandemic was wreaking havoc on the restaurant industry, one of the largest restaurant operators to be affected was NPC International. This is a major franchisor of several national fast food brands, including Pizza Hut. NPC declared bankruptcy in July 2020, exposing its 1,200 locations of the beloved pizza chain to a potential closure. But as it turns out, NPC's implosion couldn't have been better timed. Based on comments from David Gibbs, CEO of Yum Brands, the future of the Pizza Hut brand was never at stake in the NPC bankruptcy. In fact, it allowed Yum to accelerate a strategy it's been pursuing since before the pandemic, ridding the Pizza Hut brand of less profitable dine-in locations. In fact, at the time of NPC's bankruptcy proceedings, 300 of its units were already scheduled for closure. I want to take a look at their 12-month price target. Looking at tip ranks, 13 analysts have given their ratings. 8 have a buy and 5 have a hold. The average price target is $142.91. This would be a 20.6% upside from its current price of $118.49. Looking at CNN, 22 analysts have offered their 12-month price target. The median is $141, which is a 19% increase from its current price. The highest is $156 and the lowest is $124. Looking at their current stock price, they are at $118.49. Today they went up $3.35, which is a 2.9% increase. Looking at their year to date, they are down $18.04. This is a 13.2% decrease. This is all I have for Yum Brands. I think KFC, Taco Bell, and Pizza Hut are going to remain here for many more decades to come. Out of KFC, Taco Bell, and Pizza Hut, I eat at Taco Bell the most. Through the good times and the bad times, these places offer cheap, affordable food. People have kids and need something quick. During a recession when things are tight financially, these companies are around. Competition is fierce, but people love food and it's a necessity. I'm interested in Yum Brands' continued investment in their digital side. If you like this video, please like it, subscribe, and let me know in the comments what you think. Hopefully you weren't starving while watching this video. As always everyone, thank you for tuning in, stay safe, and I'll see you all next time.